California's largest insurer is raising its rates by an average of 20% on California homeowners. And Macvic has more on the increasing cost and what homeowners can do about it, if any.
Yeah, Liz, options are getting more and more limited right now. State Farm announcing that it already announced, rather, in May that it's no longer going to issue new homeowners policies in California, but that current customers can stay on. Well, now we know that in order to do so, they're going to have to pay up. Both in May and today, State Farm points the finger at risk, what it calls rapidly growing catastrophic exposure to things like fires and floods, as well as a steep increase in home repair costs. So State Farm is now raising rates by an average of 20% starting on March 15th. That is an increase specific to California customers. Farmers and Allstate Insurance also announced last year that they are limiting new policies here. I spoke today with the head of Consumer Watchdog for his take.
In effect, the insurance companies are holding us all hostage to this demand for higher rates and less regulation. And I think the commissioner has just thrown in the towel and said, I'm just going to do what the company wants.
So speaking of the insurance commissioner, Ricardo Lara, I reached out to his office for an interview. They declined, but sent a statement saying in part that he is focused on protecting consumers and using every tool at the department's disposal to make sure policyholders do not pay more than they are required. State Farm sent out a statement saying we are committed to working cooperatively with public policymakers and officials on reforms that promote market stability and the long-term interests of our California customers. Now, one option that California homeowners do have is fire insurance through the state. It's called the FAIR plan, but it only covers fire damage. So homeowners still need another policy to cover things like water damage and theft. Liz.
Ann, thanks so much.